plate which we have before us is a couple of decisions of Supreme Court and High Court. Of course, the list circulated has got very many judgments, and we are conscious of the fact that we will not be able to deal with all of them listed. Leave aside, I mean, we may not even be able to make a mention of the propositions covered there. So we are going to cover all of the Supreme Court decisions and a couple of High Court decisions chosen. There was a specific mandate that do not touch the decision of the Supreme Court on 148 for the reason that there are papers planned in the forthcoming RRC of the chamber. There has been very recently a lecture meeting sort of a thing by Mr. Chaitanya on reassessment, and maybe a couple of activities have been planned. So that decision has been deliberately and consciously kept out. Nevertheless, I mean, I was told that you may mention a point or two. Now, since a point or two need to be mentioned, all that I would like to mention is maybe only 2 points on that judgment. A, Supreme Court has said that all notices issued under 148 will now be deemed to have been issued under 148 capital A of the Act. All other contentions have been kept open. Assessees are free to take up all other defenses which they feel are available to them. The most important point which comes to my mind is that while the notices are deemed to be those issued under 148 capital A, those notices issued in the period April to June were on the basis of reason to believe. Supreme Court has not said that those reasons to believe will now be deemed to be in reasons suggesting or information suggesting escapement. Therefore, now till 2nd of June, when we get the information from the assessing officer, we will have to, in each case, to my mind, examine whether what he is now giving us satisfies the parameters of information suggesting escapement of income. And also, if you compare the language of 147 erstwhile versus 147 today, a greater onus is there on the assessing officer, where earlier it was the 147 read that there should be reasons to believe that income chargeable to tax has escaped assessment. New 147 as it now reads is income chargeable to tax has escaped assessment. So therefore, the burden to my mind is much greater on the assessing officer now. So this is one thing we'll have to keep in mind. Second will be with whose approval is needed. Was there an approval change between the erstwhile era and today's era? Because when the AO then sought approval, he would have sought approval under the erstwhile provisions of 147. Supreme Court has not said that those are dispensed. One downside of the decision appears to be that for all times to come, probably one may say that 148A small a has been rendered redundant, which even otherwise, because of the words if required, a view was possible, and I think it was more of a plausible view that 148A small a inquiry will be as an exception, not as a rule, and that was indicative by the presence of the words if required. The positive side of the instruction of CBDT is that CBDT now clarifies that the limit of 50 lakh is for each assessment year. On reading the provision literally, one could have possibly taken a view other way around also. But now it's at least the instruction makes it clear that the limit of 50 lakh of rupees is to be examined on a year-to-year basis, right? And there also one will have to see that the limit qua the position as was prevailing in Finance Act 21 was with reference to only an asset. The other two entries have been captured by the Finance Act of 2022 and will apply to notices to be issued post the enactment of Finance Act of 2022. So this much about the Supreme Court decision. I mean, we can go on and on for that decision, but we don't, I mean, that's not the agenda today.
Just to understand this if required word, somewhere I read or I have listened, if required in search and seizure cases and survey cases, it is not, inquiry is not required.
If you go through the definition of information suggesting escapement, most of the information is such that no inquiry is required. It is only certain categories where you got information under Section 90 or under Exchange of Information Treaty that some information will be, I mean, some inquiry will be required, but for that, it's the automatic trigger according to me. So the if required was that out of those information suggesting escapement, most of them will not require. There are certain categories which will require. So therefore, if required, so depending on where you are being placed, because if in every case of risk assessment parameter, which is flagged, it's already flagged. Now, what more do you want? What do you want him to conduct further?
The first time this security has come out with this circular about risk management, so when these notices were issued, such mechanism was not in place. So your question about information fulfilling this.
This was there. It was not in public domain. It was not known to you. Internally, it was there. And if you want to be doubly sure about that, you can make an application under the Right to Information Act and say what was the parameter then prevailing. Give me a copy thereof. Right? Now, with this background, let's come to the decisions which have been selected. Now, the first one is the Supreme Court in Motisans Entertainment, India, where Supreme Court says that High Court is not justified in disposing of an appeal with a one paragraph order without discussing issues that arose for its consideration. Therefore, all the High Court orders, according to Supreme Court, need to discuss the issues which arise for consideration of the High Court. Now, here was a case where revenue came up in appeal to the Supreme Court against the decision of the Rajasthan High Court. For AY 1213, the assessing officer added 7.78 crore to the total income of the assessee on the ground that the source thereof is not properly explained. The addition, rightly or wrongly, was made under Section 56. We are not into the correctness of the addition over here. The CIT appeal granted relief in an appeal filed by the assessee to the extent of 6.36 crores, and qua the balance 1.14 crores is sustained the addition. So 7.78 added by the AO, CIT gives relief to the extent of 6.36, sustained to the extent of 1.41. Both the assessee and revenue come up to the tribunal. The assessee qua 1.41 and the revenue qua the 6.36. The tribunal grants relief in respect of 1.41 crore as well. Revenue comes up to the High Court. High Court dismisses the appeal of the revenue with a one paragraph order, just mentioning that both the counsels appeared, the orders were explained to us, what it is, and the tribunal, considering the matter, discussed the law. While considering the matter, has discussed the law. So High Court only says that the tribunal has discussed the law as well as the factual metrics. In our opinion, this is more appreciation of facts rather than question of law. So all that probably the High Court was trying to say is that no substantial question of law arises for our consideration, and therefore we are not inclined to admit the appeal. Possibly that is what the High Court wanted to say. Against this one para order of the High Court, revenue came to the Supreme Court and says this is not the way things are to be dealt with. I mean, the High Court should have adjudicated, High Court should have admitted our appeal. The Supreme Court holds that certainly High Court was not right and justified in disposing of the appeal with a one paragraph order without discussing the issues which arose for consideration. Therefore, High Court has to discuss in every order the issues which arise for its consideration. The Supreme Court says, we therefore allow the appeal, set aside the view taken by the High Court and remit the matter back to the High Court for fresh consideration. Now it will have to be seen as to what view the High Court is now taking when the matter is sent back to it. On the similar lines, first 2 or 3 decisions are to this effect only. On the similar lines is the decision of the Supreme Court in Vishal Patil's case, where the assessee came up in a writ petition to the Bombay High Court, and the assessee challenged a reopening notice before the Bombay High Court on several grounds. The Bombay High Court dismissed the writ petition by an order which now Supreme Court has held to be cryptic, non-speaking and non-reasoned order. So Supreme Court says that the order dismissing the writ petition which we have before us is a cryptic order, it's a non-speaking order, it's a non-reasoned order. The two paragraphs of the order from the High Court have been reproduced by the Supreme Court. And it is observed on reading those two paragraphs that qua the petition, the High Court has mentioned only one sentence. We are not inclined to entertain the petition. So the High Court says we are not inclined to entertain the petition. Before the Supreme Court, writ petitions were produced. Writ petitions filed before the High Court were produced. And it was explained that, look here, we have challenged reopening on several grounds. None of the grounds raised in the writ petitions have been dealt with by the High Court on merits. There is no discussion at all on the grounds which were raised in the writ petition. The division bench of the High Court has dismissed the petition in a most casual manner, which is unsustainable. No reasons have been. What does Supreme Court say? Now here I have some concern on this decision, and this is very dangerous para which has found its place by the assessee has won in this case. There is a dangerous observation to which I'll come in a minute. At the outset, Supreme Court says that the manner in which the High Court has dealt with and disposed of the writ petitions without passing a reasoned order is not appreciated by this court. Understandable. When a number of issues or grounds were raised in the writ petition, it was a duty cast on the court to deal with the same and thereafter pass the reasoned order. So on each ground, expected is that you deal with the ground and pass a reasoned order. When the Constitution confers on the High Courts the power to give relief, it becomes the duty of the court to give relief in appropriate cases, and the courts will be failing in their duty if relief is refused without adequate reasons. So they say you give reason, adequate reason, and then refuse the relief. If you are not doing so, you're failing in your constitutional duty. The para with which I'm worried about is the court says that the High Court, in exercise of powers under Article 226 of the Constitution, was required to have independently considered what? Whether the question of reassessment, question of reopening of assessment could be raised in a writ petition, and if so, whether it was justified or not. Now, this is something really alarming. It can change the entire scenario. Now, the High Courts will start examining, possibly this High Court itself, in this very case now, will examine whether against reopening of the assessment, a writ lies or does not lie, and if it lies, whether it is justified or not. Yesterday evening, I think on WhatsApp, there was a decision circulating following this paragraph. Of course, that decision was dated January, so therefore it could not be in the light of this paragraph. But that from the little information which was on the WhatsApp, what I could understand is that the High Court said, why are you here in a writ? You can go and against reasons recorded, against the order disposing of the objections, the assessee came to the High Court and the High Court declined to entertain the writ on the ground that you are still at this stage. You can file your return. He has not done an assessment. Let him do the assessment. And after he does an assessment, you do have alternate remedy available. So now probably that will be the line of thinking which will start. I'm only worried whether this could be, the High Courts will say, we have the blessing of Supreme Court in what we are now doing, because this has been going on for years. We've been challenging the reassessment notices and the High Courts have been entertaining the writ. But now here for the first time, at least to my mind, is an observation from the Supreme Court which says the High Court in exercise of its power under Article 227, was required to have independently considered whether the question could be raised in a writ or no. Therefore, Supreme Court is raising a doubt whether this can be raised in a writ or no. If yes, go ahead. Then,
whenever we have the issue of jurisdiction, I still understand that yes, that can be still raised because if the issue.
by the way, he will still answer that you have an alternate remedy. You come to me in a writ.
But jurisdictional issues can always be raised, treating it as a non.
Like,
those you can directly go to the value of a rate.
now, under the new era, what will be the jurisdictional issue?
No, new era, yeah, that one will be there. Yeah, information because it's going to be too wide. And that I appreciate. Yes.
Because now it's, according to me, more objective. You have these four sets.
Certain issues like still maybe he has not given the permission of the.
That's a technicality. That would be technicality. I mean, so on that also, I'm saying tomorrow, if you were told that let him do an assessment and you have an alternate remedy available by way of CIT appeal and a tribunal. So why do you want me to exercise the jurisdiction over here? So, I mean, this observation to my mind is really dangerous. I mean, a very small order in that sense.
Okay. So, suppose High Court rejects, High Court says don't come to me, and then one can go to Supreme Court. Like
One can undoubtedly go, undoubtedly one can go to the Supreme Court.
We are
Correct.
eligible for this.
Correct. Here was the case. No?
So now the Pandora's box is open. Till the Supreme Court decides,
Till the Supreme Court decides.
under these circumstances you can come. Till that time,
This para could create havoc.
Sir, but what about this GK and Driveshaft and Asian, which are already based on the procedure that 4 weeks time?
That is the time to be given. He is saying, I will not strike down. I mean, whether you should strike down under Article 226 or no, that's the question.
No, then even after disposing the objections, it is till 4 weeks he should not pass the order. Or if only if the SSC doesn't challenge, then the proceeding should go ahead.
So what you are saying is, by virtue of GK and Driveshaft, there is an indirect blessing of the Supreme Court that yes, it is challengeable because that 4-week window which is available to me is only to challenge that
Yes,
order.
otherwise there is no.
Yeah, point well taken. Point well taken. But under the new era, I do not know whether that will work.
And some I don't know. In WhatsApp only I read maybe around 1 month ago. Some Delhi High Court had dismissed 148 petition.
Yeah.
The alternate remedy.
Yeah.
Yeah.
So now this will happen more, I think. Yeah, here it is. Sorry, it's not bomb.
And against such rejection, one can go to the Supreme Court.
Yeah, correct. Undoubtedly, one can go to the Supreme Court, no doubt on that, against such a rejection. But will Supreme Court entertain, or will Supreme Court say, I am deciding, okay, no, if that be the case, then it will be a full stop for all times to come from. Then the Supreme Court goes on and notes earlier decision, and it says that Supreme Court in the past has held that courts need to pass a reasoned order in every case, which must contain, now I am reading this out or why I am paraphrasing is that if this is expected of the courts, this is certainly expected of CIT appeals and the tribunal. What Supreme Court says is that it is expected for a court to pass a reasoned order in every case, which must contain, number one, narration of the bare facts of the case, of the parties to the litigation, the issues which are arising in the case, the submissions urged by the parties, the legal principles applicable to the issues involved, and the reasons in support of findings on all the issues arising in the case. So once you have all these facts, and imagine once you have all these 5, then the order becomes a self-contained document. The higher authority does not, I mean, it becomes very easy for a higher authority to decide whether the order needs to be interfered with or that needs to be sustained. In that very same case, the Supreme Court says an order bereft of reasoning causes prejudice to the parties because it deprives them to know the reasons as to why one party has won and the other party has lost. Then there is another decision of 2021 of the Supreme Court in UPSC versus Bibu Prasad Sarangi, where the court was emphasizing on the reasons to be given by the High Court while exercising the power under Article 226. Now, this is also in the same order. So, when this order is being read, the High Court is bound to read this decision as well. And there it has been held that reasons constitute the soul of judicial decision. Reasons constitute the soul of the judicial decision. And how judges communicate in their judgment is a defining characteristic of the judicial process, since quality of justice brings legitimacy to the judiciary. So they say quality of justice brings legitimacy to the judiciary, and then they go on and they observe those statistics of disposal of cases is important. Supreme Court observing this. Of higher value is the intrinsic content of the judgment. So they say we appreciate that the statistics is important, but greater value is the intrinsic content of the judgment. As far as this writ was concerned, the court set it aside and they said that let the High Court examine and give a clear finding was required upon analysis of the relevant documents. So now the High Court will have to adjudicate on each of the grounds.
They put more responsibility and onus
On the High Court. Yeah, on the High Court.
High Court and even the lower also.
And
they are supposed to. High Court is supposed to be.
Then somebody will say it's not binding on Mahendra Bhai, because this applies only to the High Court, because this I'm telling you out of real life experience, and this has I've read it in the orders. There is a line of decisions which says that the decision of the higher authority is binding on the lower authority. Correct? We are all aware of those cases. When that was pointed out to some assessing officer, he says higher authority binding on the lower authority applies to the appellate authorities, not to the income tax actives. And we had to dig out a decision, and it was in the context of excise that we got a decision that even the officer is bound. Otherwise, the proposition does not come out so very clearly from the judgments. And the officer used to say, this is your inference, that this is binding on him, therefore it is binding on me, is what you are suggesting. It's not written here, but it was in the excise or customs case that we found a directives.
Their argument is we have to keep the issue alive.
To what extent? To what extent? That is the question.
Yeah. Now, then you have a Supreme Court in Bajaj Herbals again saying that the High Court cannot dismiss an appeal under 260A. Earlier decisions were on the writ petitions. Now it is on an appeal under 260 capital A by simply observing that no substantial question of law is involved. Right? High Court's order must be reasoned and a speaking order. Here also, the High Court's order was a non-speaking order. The High Court in one line said that there is no substantial question of law. Right? And there was no further discussion at all in the order of the High Court. It just said, we have gone through the material on record. We are of the view that none of the questions as proposed by the revenue could be termed as substantial question of law. All the questions proposed are on factual metrics of the case, period. The Supreme Court held that this is a non-speaking, non-reasoned order, and even submissions made on behalf of the revenue are not recorded, and therefore the impugned order is unsustainable. So the court held it to be unsustainable. Here also, it was set aside back, and the matter was remanded to the High Court to decide and dispose of the appeal afresh in accordance with law and on merits. Of course, Supreme Court said, if the High Court is of the opinion that the proposed question of law are not substantial questions of law and they are on factual aspects, it is open for the High Court to consider them according to law. However, it should pass a speaking and a reasoned order after recording the submissions made on behalf of the respective parties. Now, this also gives effect to the earlier observation which we saw in the earlier decision, that the parties must know, why did I win? Why did one party win and why did the other party lose? Once you give a reasoning, then I will come to know that what his argument were, what was the counter argument, and when I decided in favor of one as against the other, why did I do so? In fact, your entire GAR is on why. Today, I say to the clients that once upon a time, the question was, what have you done? Today, the officer says, I know what you have done. Don't tell me that. You tell me why you did what you did. And that is going to give you a solution to GAR. If you can tell me why you did what you did, and you can explain me why you have done what you have done, you have, met with your requirement of GAR. No officer today asks you what you have done. He tells you this is what you have done. Why did you do it? Now, the next decision has been chosen again, firstly because it's a Supreme Court order. In the case of Praful Shah versus National Faceless Assessment Center, where a notice in SLP filed by the assessee has been accepted for remanding the matter for de novo consideration on the ground of not being granted personal hearing in faceless assessment proceedings, instead of declaring them as non-est. So what happened here was that the High Court was approached that I have not been granted a personal hearing. So declare this order to be non-est. The High Court accepted the writ, but the High Court, instead of declaring it non-est, granted an opportunity, set it aside back to the faceless assessment. Now, this is exactly what I call it as giving a second inning to the department. In the context of 50C, this happens very many times, and it is only, I think, in 1 or 2 cases very recently in Bombay that this matter has been taken up, and I have been telling, and I have told a lot many advocate friends that take this argument up in the High Court, that do not grant a second inning to the department. If the AO did not then refer to the valuation officer, many a times we have series of orders where the tribunal says, okay, now go and refer. Now, when you say now go and refer, you are giving him a second inning. Why are you giving him a second inning? He has missed his bus. I told him that time in the course of assessment that, sir, please refer it to a DVO. I am challenging the stamp duty valuation. Rightly or wrongly, for whatever reasons best known to him, he chose not to make a reference to the DVO. Today, when time has come at the appellate forum, the tribunal sends it back and says, now refer it to a DVO. Why? There have been of late means last 1 year or 1.5 years, there have been decisions which have exactly used this, that why do we give a second inning to the department? Therefore, if you did not then refer, you have lost the bus. Now you cannot go and invoke 150. You cannot then now adopt the stamp duty value and compute the capital gains. Here was not the case of capital gains. Here was a case where in the course of faceless assessment proceedings, a request was made for personal hearing that was not granted. The assessee approached the High Court, Bombay High Court, in a writ petition and prayed that quash and set aside the impugned assessment order. The prayer was quash and set aside the impugned assessment order passed under 143(3) with 144 capital B, and the notice of demand, and the notice initiating penalty under 270 capital A, and in the brackets the petitioner said, and declare clause number Roman 8 of subsection 7 of 144B, subclause H of clause 12 of subsection 7 of 144B, and 1 or 2 other clauses as unconstitutional, being violative of Article 14. The High Court says the Counsel for the Revenue admitted that yes, principles of natural justice have been violated and he should have been granted an opportunity of the hearing. Therefore, allow prayer A without the bracketed portion. The court allows prayer A without bracketed portion, but modifies prayer A further and says, instead of quashing, we are setting aside. Against that order of setting aside, the writ petitioner approaches the Supreme Court and in an SLP, and you have now Supreme Court saying, admitting the SLP, therefore notice has been issued, and Therefore, now the court will have to decide whether or not, the hearing should be, whether or not the assessment order should be set aside or no.
The Supreme Court said it should be known as.
It will decide.
It is just admitted.
It is
They
admitted.
have admitted. It's the
It's admission.
Okay, okay.
It's admission.
Whoever missed the bus now, they should again file Supreme Court. Majority High Court has set aside. Majority of the cases.
Most of it.
Yeah. Now we come to a substantive, decision of the Supreme Court.
Now, work of Supreme Court will increase now.
So that one Supreme Court will decide and then it will follow. See, if Supreme Court decides that you can exercise your power, then everybody will again start exercising the power. Or Supreme Court will say, no, you cannot exercise the power. If you cannot exercise, then that will stop at least. Okay. Now, Wipro Finance Limited versus CIT, a decision of three-judge bench of the Supreme Court against the order of the Karnataka High Court. Now, here was a company which was engaged in lease financing. It used to purchase assets and give it on lease. For carrying on this business, it entered into a loan agreement with Commonwealth Development Corporation, having registered office in England, in UK, for borrowing an amount to carry on a project described in the schedule. So basically, the company took a loan of 5 million sterling pounds for a purpose that I will buy equipments, and those equipments I'm going to lease it. That's my business. However, it so happened that when it went to repay the loan, because of the exchange fluctuation, there was a substantial loss. That loss in the books of accounts was capitalized. Yeah. There was some other exchange fluctuation loss of 1 crore and odd, which was claimed in the return against the returned loss. The AO assessed a positive income. So 110 was the loss which was debited to revenue account. 2 crore 40 was a loss, exchange loss, which was capitalized, which was arising because of this loan in foreign currency in sterling pounds. The matter traveled to the tribunal. At the tribunal, for the first time, the assessee raises an additional ground and says, I have erroneously capitalized it. I need that as a deduction. It relied on NTPC, and the tribunal opined at the outset that 43A has got no application. CIT appeal rejected on the ground of 43A. CIT appeal dismissed the appeal on the grounds of 43A. Tribunal says 43A here has got no application to the present case. Then it proceeded to examine whether the loss suffered owing to exchange fluctuation can be regarded as revenue expenditure or as capital expenditure. It answered the question in favor of the assessee by holding it that it will be a revenue expenditure. The tribunal notes that the funds were borrowed, which were borrowed in foreign currency, were used for the purpose of regular financing business. Such income from that business has been offered for taxation and has been accepted by the department. The quantification of the exchange fluctuation loss, the tribunal notes, is done in accordance with Rule 115. Then the tribunal holds that exchange fluctuation loss is an expenditure incidental to carrying on of a business and comes within the purview of 37 of that. One may debate whether this is an expenditure or it is a loss. If one comes to a conclusion it's a loss, I would feel you'll get it in 28 instead of coming to 37. But the tribunal says this is an expenditure which comes within the purview of 37, as the same is incurred wholly and exclusively for the purpose of business. The tribunal says it's not anybody's case that the funds borrowed in foreign currency have been diverted for non-business purpose. And once you come to a conclusion that funds have been borrowed for the purpose of business and they have not been utilized or diverted for non-business purpose, the Supreme Court decision in India Cement squarely applies and fully covers. Then they say that all the tests laid down by Supreme Court in 124 ITR are also satisfied, and loss cannot be treated as contingent in nature, as loss on account of exchange fluctuation has been quantified in accordance with Rule 115. The matter was, now when the tribunal accepts the additional ground, it records a finding that the DR has got no objection. The DR has got no objection to my admitting this additional ground. The High Court reversed the view taken by the tribunal, mainly by observing that tribunal has not recorded sufficient reasons in support of its conclusion. When the tribunal has quoted India Cements, tribunal has quoted direct paragraphs from various Supreme Court judgment. The High Court says, no, there are no sufficient reasons in support of the conclusion reached by the tribunal. Therefore, the conclusion of the tribunal is without any basis, and therefore the High Court reverses the order of the tribunal. So you are now before the Supreme Court, and Supreme Court observes that the loan amount was used for financing the existing Indian enterprises for procuring the capital equipment on hire purchase on lease basis. There was no dispute that financing of the SSE to the existing Indian enterprises is an independent transaction or an activity carried on in the normal course of business of the appellant. The transaction of loan between the SSE and CDC, the lender in UK, was in the nature of borrowing, which was necessary for carrying on the business of financing. It was certainly not for creation of an asset of the appellant as such, or acquisition of an asset from a country outside India. I do not know whether the first part is correct or not, because the SSE was in the business of hire purchase. Therefore, it purchased plant and machinery and it gave it on hire purchase basis or on lease basis. Therefore, that plant and machinery so purchased may possibly have been an asset of the SSE company. The point to be noted here is that even if it is only interest up to the date when the asset is put to use, which needs to be capitalized. Thereafter, not. I'm saying all this because this is a 3-member decision. I do not know what, made this decision go to a 3-judge bench. Then the court says that the loan is wholly and exclusively for the purpose of business. The tribunal was right in answering the claim of the appellant in the affirmative by relying on Supreme Court in India Cements case. The exposition of this decision has been elaborated in subsequent decision in Empire Jute. The court also noted that the tribunal had extracted, and the court reproduces. Supreme Court reproduces portions from the tribunal order and say that, look here, tribunal has quoted these Supreme Court decisions. The analysis done by the tribunal and the conclusion arrived at is the correct approach, consistent with the exposition of the Supreme Court, and therefore needs to be upheld. Then the Supreme Court says the High Court missed the relevant aspects of the analysis of the tribunal concerning the fact situation of the present case. As a matter of fact, High Court has not even adverted to the aforementioned reported decisions, much less its usefulness in the present case. Now, before the Supreme Court, the revenue argued that, look here, the assessee had taken a conscious call. It is not that he had capitalized everything. He had chosen something in revenue and something in capital. And therefore, for the first time before the tribunal, he could not raise this contention. The Supreme Court says this submission needs to be stated to be rejected. The submission needs to be stated to be rejected. It says tribunal was conscious of the fact that the claim was set up for the first time before it, and it was clearly inconsistent and contrary to the stand taken in the return. So Supreme Court says tribunal was conscious of the fact that, number one, claim is being made for the first time before it. Number two, it is contrary and inconsistent with the stand taken in the return, yet it entertained the claim. Also, no objection of department was recorded. See how important this sentence became. One sentence in the tribunal order that the DR has got no objection, which helped later. Then the DR, I mean, on behalf of the department, Goetz, reliance was placed on Goetz. Goetz decision that no fresh claim can be made unless through a return. The Supreme Court says nothing doing. Goetz itself very clearly says that limitation does not applies only to assessing authority and does not impinge upon the plenary powers of ITAT bestowed under 254. Goetz not applicable to appellate authorities. Till now we had several high courts saying that. But now we have Supreme Court 3-member bench saying that Goetz will not apply, will apply only to assessing authority and does not impinge upon the plenary powers of the appellate authorities. Right? The Apex Court confirmed the decision of the tribunal, and as regards 43A, Supreme Court outright rejected. I mean, this is not the case where 43A should apply.
So ultimately, like going to the Supreme Court or some higher authorities is always desirable.
Obviously, if the stakes are, I mean, you have to strike a balance between the litigation cost and the stake.
Yeah. If it's a big case, then it's worth.
Or earlier big cases, then we set aside. So see the cost now. We will discuss Supreme Court, all the three, they will set aside.
Now, the last of the Supreme Court cases which we have for today is on the maintainability of appeals basis the tax effect. Now, here was a case coming from the Rajasthan High Court. The revenue came to the Supreme Court against the order of the High Court set aside the order passed by the tribunal deleting the penalty. Therefore, High Court confirmed the penalty and agreed, sorry, my mistake, the SSC preferred an appeal to the Supreme Court. Now, it was mainly submitted that because of CBDT Circular number 21 of 2015, an appeal did not lie to the High Court if the tax effect is less than 20 lakh. So, SSC's contention was that in my case, the penalty effect was less than 20 lakh, and therefore I should not have entertained that appeal, and the appeal did not lie to the High Court, and therefore the decision which went against the SSC in the High Court, the SSC wanted to salvage that situation, not on merits, but on technicalities. Now here, the contention was that original penalty was 29 lakh rupees. The CIT appeal granted relief and it got reduced to 6 lakh rupees. Therefore, the contention of the SSC was that your stake involved is only 6 lakh rupees and not 29 lakh rupees, and therefore the High Court ought not to have entertained, or the appeal did not lie to the High Court by the revenue because of the CBDT circular. The apex, so therefore basic question before the Supreme Court is whether while calculating tax effect, do I look at the original penalty as levied, or do I look at the penalty as reduced by a subsequent order of CIT? Because if I look at it from the point of view of the original order, the penalty quantum exceeds and I'm not covered by that CBDT circular. But if I look at the relief granted by CIT appeal, now how and why did CIT appeal grant relief is not evident here, but for whatever reasons, the penalty of 29 lakh came down to 6 lakh rupees. So the question is whether subsequent reduction in penalty house the jurisdiction. The answer is no, because the Supreme Court says that what is required to be noted is what was challenged by the revenue was the entire penalty of 29 lakh. It is not the reduced penalty. It is not the reduced penalty which was challenged. The entire penalty was challenged, and before the tribunal, both SSC and the revenue came up in appeal. Naturally, SSC came against what was sustained, and revenue came against what was deleted. So they said what was there before the tribunal? The entire 29 lakh rupees was there before the tribunal. Now see, this could be, if one thinks practically, there could be certain grounds where CIT appeal has given you a relief, but on which the department does not come to the tribunal, right? Then for coming to the High Court, these reliefs, will you consider them all? Am I articulating the question correctly? There are various additions in the assessment order. You challenge, the SSC challenges the assessment order to the CIT appeal. Relief is granted on some, relief not granted on some. Out of some on which relief is granted, rightly or wrongly, department comes up in appeal qua some grounds, does not come up qua other grounds. Comes up in appeal qua some grounds and does not come up in appeal qua the other grounds. Now I am posing a question as to whether those grounds on which relief was granted to me by CIT appeal and on which the department does not come to the tribunal, and from the tribunal when I have to come to the High Court, do I look at even those grounds on which relief has been granted by CIT appeal and which are not before the tribunal for computing the tax effect or not?
Yes, only that tribunal, whatever was before the immediate lower authority.
I would believe that what you have accepted, you have accepted. So therefore, it is only qua the balance which is a subject matter of challenge that the tax effect will need to be computed. Correct. Correct. Right. So here that now then you have, sorry, I said that was the last, but that was second last of the Supreme Court. Now you have a decision which again unsettles, but possibly one may try to say that this was on typical facts. We are all aware that we have Supreme Court in Maruti Suzuki, and prior there to Spice Infotainment, Delhi High Court, against which SRP was dismissed in 11 cases, where the proposition is that a notice issued or an assessment order passed in the name of dead person is bad enough. Qua amalgamation, an assessment order passed in the name of amalgamated entity is bad enough, is the proposition one comes to. Now, similar was the position here before the Supreme Court in the case known as Mahagan Realtors Private Limited. Now, this was a case where for assessment year 2006-07, the assessment order mentioned both the names. The assessment order mentioned both the names, the amalgamated company and also the amalgamating company. And the it is for the first, we do not know what happened at CIT appeal, but we are told PAN number was of this thing, amalgamated. Now, Supreme Court very nicely tries to cover up the things and decides against the SSC. And now, I do not know whether this question will be relevant anymore or no in the electronic era. Because in an electronic era, today when assessment orders are coming online, I believe it is the machine which is generating the assessment orders. Therefore, such mistakes are less likely to happen for the simple reason that even when you go to make submissions upon amalgamation, I think one will have to log in into the ID of amalgamated company only through the amalgamating company. Today, when an individual dies, what do? You apply for being a legal heir. The CPC takes certain documents from you and then accepts you as a legal heir. Then you log into the portal of the deceased person, but you go through your portal. Your portal is the portal of the legal heir. So when I go to my portal, Jagdish Punjabi, then I will be asked Jagdish Punjabi individual. Second will be legal heir of so and so. I can be legal heir of multiple people, so legal heir of so and so. So there comes a drop down. If I say legal heir of X, then it takes me to the account of X on the portal. Then it takes me to the account of X. I am told, I have not tried it personally, but I am told that for amalgamation also similar mechanism applies or should apply logically. Because if the amalgamated entity ceases to exist, are you not duty bound to inform the revenue about this?
Normally what happens practically, even in this era only, that company A gets amalgamated with company B. So the company A vanishes in identity. But if the notice is issued on company A, even if the SSC has informed, company A and B have informed that, look, this is the amalgamated order of the High Court, and therefore now you kindly cancel company B's PAN number. In spite of that,
I do not know whether they will cancel the PAN number.
yeah, somehow
They will.
I'm trying to give a message to the AO that, look, we have got amalgamated.
Correct.
So the existence of company A is known. But still, if the notice is issued on company A, you will be making a submission also from A's portal only, as an A only. You will not be able to submit.
A has amalgamated into B, right?
Yes, A got.
I don't think that is the correct.
Sir, I'm facing.
It was, once upon a time, it was correct. Here, I would believe I need to apply as a successor. I do not know, legal representative is not a proper term. Amalgamated company will become a successor to the amalgamating company. And it will say, now I am the successor. Because if you go to Marshall and Sons, and which is what has been repeated here also, Magan, that it is one assessment which needs to be done in the hands of the transferee company. The assessment has to be in the hands of the transferee company for all income which is earned by the transferor company from the effective date onwards.
Sir, in one of my cases in 2011, a firm was converted into a company. The PAN of the firm was alive because there were some TDS liabilities which we are contesting, which have not got over. Somehow the exports and imports from customs were recorded in the erstwhile firm, and they uploaded that yes, some 500, 600, 700 crores worth of exports and imports have happened in the firm's name. And
Which was a fact.
No. Actually, it has been transferred.
It has been transferred, but then the erstwhile firm did export, or the company exported.
The company exported.
So therefore, this would have happened. The customs, at the customs level, for that entity, the corresponding PAN would not have been changed.
It has been changed. But I don't know how they have uploaded or what has happened at customs level. We are trying to find out, but we are not able to do it. But when I went, the assessments were reopened in case of the erstwhile firm. I gave them a reply that it is not possible for me to file the returns because its company is not in existence. The firm is not in existence. The officer told me that no, you please at least file the return, we drop it after that. You file a nil return. After I filed a nil return, unfortunately, everything got transferred to faceless and all the additions were made. And I am in written from the High Court.
Again, the Supreme Court will have what Jagdish says. The Supreme Court will have what Jagdish.
So there is no remedy. I had to file the returns. They said that just for closing also you will have to file the returns. I will not be able to close it.
You should not have return, at least in that PAN. You should have said a dead person cannot file a report.
I agree. And I immediately gave a letter to that effect.
You should
So
not
it
have.
is only for the purpose of your closure that I have filed this, otherwise please treat it returns as non-issue. A letter has been immediately on the very next day has been submitted to the department.
Is it uploaded also?
No, at that time it was physical.
No, you were saying 2011. 11 was online.
So in one of the this thing, 11 was reopened at that time. I have already told them that yes, this was only for 24 days. After that, it has been converted into a company, and all those records were there with them. But still, there is a gap.
The point which Mahindra Bhai made, that when amalgamation happens, I inform the AO. That is how Supreme Court, in this case, is trying to distinguish earlier Supreme Court in Maruti.
So we have informed.
Says that there they had informed, and second plea they are taking is there the order was only in the name of the amalgamated company. Here your order is in both the names. And when you read this order carefully, it's quite a bulky order. And when you read this order carefully, the assessee has informed, but Supreme Court says no, that letter was for AY 7-8. It was not for 6-7.
Correct. That is the PCIT.
That letter which you filed was for assessment year 7-8. It was not for 6-7. Therefore, I mean, for 6-7, they say he has not informed. They are not saying so clearly, but they have in the passing mentioned. Okay, but here is a case where the facts were horrible. I mean, so they say bad facts make bad law. This is a classic example of that, because when you go through, I'll just run you through dates so you'll appreciate what happens. There were survey proceedings, by which time amalgamation scheme was made ineffective, but no information. Then in March 2007, the assessee, amalgamated company, gives post-dated checks for payment of tax of income declared in the survey. They say post-amalgamation, it was your duty to take those checks back and give fresh checks. You have not done that. So this is one. Then in 2008, August, this was 2007 March survey. 2008 August, there was a search on this entire group of companies. In the course of search, nobody mentions a word about amalgamation. Disclosure is made entity-wise, even qua those entities which are going to be amalgamated. Normally, then I would have said, this is my income, right? Then in 2009, a notice is issued after search to file the return of income. They don't file a return, a prosecution notice, show cause is issued. To that they reply. The reply to show cause notice of why prosecution should not be initiated is in the name of this MRPL itself, the amalgamated. Then, as you go ahead, you have 143.2 there. The return is filed. After this show cause, they say we are filing, don't initiate prosecution. That reply is given by the amalgamated company in its own name. Then the return is filed. When return is filed, they say, the Supreme Court notes that you filed return in your old PAN. When did you file return in your old PAN? You were already amalgamated. Same thing as you did. Right? Then they say, not only that, in business restructuring column, information column, whether in case of amalgamated company, write the name of the amalgamating company. The column is there in the return of income. There the assessee writes not applicable. So Supreme Court has strictures. It says this was suppression. Then it asks for shareholders. Who are the shareholders? It gives the shareholders of erstwhile MRPL. Now, after amalgamation, then you should have given a. So this is a classic case on facts, but this now will become a basis for other cases that Supreme Court has said it is not to be struck down.
Because what happens in amalgamation, the High Court wants the they said to be served on the ROC, RD, and income tax officer also.
Correct.
For any objections, from their side.
Yeah.
So
whether that by itself is an intimation. That is no. If I have to defend them.
Whether whether the amalgamation is approved, post approval it has to be
correct. I would, if I have to defend, I will say no.
Automatically,
there should be a copy of the order too.
Copy of the order also should go to the RDRC.
But even if copy goes, it becomes difficult.
I don't think it goes to the income tax office.
I think it is duty of the person.
Discuss this aspect that since you are a party to that also, now how can you say that the department that you don't know about it?
But there, promptly the SSC intimated the department. That is what weighs.
Yeah.
See, your conduct weighs. Now here you have a person who is behaving like this.
Here the feeling given that you yourself are trying to suppress it.
Suppress.
Correct.
Now
And
you are
correct.
not that I was.
So very bad.
Yes. So facts are.
in CIA, in the tribunal, he does not even file an appeal. He files only cross objections. And cross objections are dismissed only on the solitary ground that assessment order is in the name of a amalgamated company, therefore strike down everything. So that is how the matter travels to the Supreme Court. Now, then return of income, I mentioned that date of incorporation stated of the amalgamated company. See, all these are small things which the Supreme Court is picking up. Department did not argue, but Supreme Court has picked up. They say even the affidavit filed by us, before us, is signed by a director of so-called amalgamated company. So what are you saying here? We are non-existing. And the Supreme Court says there are 100 provisions, at least 100 provisions is what they say, in the Act which deal with amalgamations. And the intent is that in an amalgamation, the business enterprise is continued. So how I have understood is that the Supreme Court is saying that the business enterprise is the soul. The body has changed, but the soul is still the same. And therefore, we are traveling with the soul. I mean, we are not going by the body. I mean, I'll read out some paragraphs. So the contention of the revenue obviously here was that, look here, both the names have been stated. Such mistake is a curable defect under 292 capital B. And anyway, he was represented. As far as Maruti is concerned, there the SSC had informed final order was only in the name of one company, and therefore facts are distinguishable. And moreover, here in the course of search, surrender of specific amounts of this amalgamated company was made. So therefore, I mean, nobody told us all this. Post-dated checks were issued. All that I told you has been said. Now, what does Supreme Court say? Supreme Court says amalgamation is unlike winding up of a corporate. Unlike winding up of a corporate. So therefore, it is not winding up. Later on, they say, don't read Companies Act and bring it here. See, they had to decide against. They had to decide. I mean, the facts were so bad. They had to decide against.
Because of this fact,
They have said one small sentence is one. We bring out that. So they say, in case of amalgamation, the outer shell, which is what I said, the body, outer shell of the corporate entity is undoubtedly destroyed. It ceases to exist. Yet, in every other sense of the term, corporate venture continues, imported within the new or the existing transferee entity. That's why I said, Atma wahi hai, sharir change ho gaya. In other words, the business and adventure lives, but with a new corporate residence. Within a new corporate residence, that is a transferring company. It is therefore essential to look beyond the mere concept of destruction of corporate entity. So don't look at destruction of the corporate, which brings to an end or terminates any assessment proceedings. There are analogies in civil law, they say, and procedure, where upon amalgamation, the cause of action or the complaint does not cease. So therefore, they are saying, udhar nahi cease hota, idhar kaise cease hota hai aapka? Udhar amalgamation mein cause of action cease nahi hota na aapka civil law mein. तो बोलता है कि वो बोलता है मेरे को बॉडी नहीं चाहिए, उसको आत्मा चाहिए.
This principle will be applicable to individual also.
So let's merge with the other companies.
Okay, so then see the root of all this is Supreme Court in Saraswati Syndicate. Original root of all this is Saraswati Syndicate. This is Saraswati Syndicate noticeably was decided in relation to assessment issues when the term amalgamation was not defined in the Act. When Saraswati was decided, Supreme Court did not have the benefit of the definition of the term amalgamation in the Act. Now we have a definition of the term amalgamation. So how does that change? I do not know, but maybe I have not understood. Not yet reached a level where Supreme Court judges things. Then they say many high courts in recent years has mostly relied on Saraswati Syndicate, which is a case where transferor entity has claimed a certain relief on the basis of agreed method of accounting, the corresponding obligation to recognize the demand was sought to be disallowed in a subsequent year in case of the then transfer. The decision of Delhi High Court in Spice, after discussing the decision in Saraswati Syndicate, went on to explain why assessing an amalgamating company without framing the order in the name of transferring company is legal. They recognize all this. Then they say a series of decisions had followed Delhi High Court's decision in Spice. All these were subject matter of SLP. They quote 11 at least. I counted, they were at least 11. Right? Then they say this court, without elaborate discussion, approved the reasoning in various statements. So they're saying, if at all we did it without elaborate discussion, which held that cessation of the transferor company was impermissible. The court notices that there are not less than 100 instances under the Act where, in the event of amalgamation, the method of treatment of a particular subject matter is expressly indicated in that. And then they quote that some instances amalgamation results in withdrawal of a special benefit. They quote ATIA because it is entity or unit specific. In case of carry forward of losses and profits, a nuanced approach has been indicated. All these provisions support the idea that enterprise or undertaking and the business of the amalgamated company continues. So therefore, somebody asked whether this will apply to individuals. There under a will, if you have bequeathed a running entity, then possibly one will say that the enterprise or the undertaking continues here also. Right? But otherwise one may be able to distinguish for various reasons. Then all these provisions support the beneficial treatment in the form of set-off deductions, etc. They say all bear out the fact that it is the enterprise which is recognized. Then they say the combined effect of 394 of Companies Act, Section 2(1)(a) and various other provisions is that despite amalgamation, the business, enterprise and undertaking which ceases to exist after amalgamation is treated as a continuing one. So if I have to distinguish from individual, I say there's no such thing, because here now Supreme Court says I'm changing my view because amalgamation is defined. You have not defined succession of business in the case of an individual, etc. One may therefore, unlike a winding up, there is no end to the enterprise with the entity. The enterprise in case of amalgamation continues. Then they discuss the facts of Maruti. Then they say, yes, Maruti noticed Saraswati. Yet, now they have to distinguish Maruti. They say Maruti does not have any discussion on definition of amalgamation in 2(1)(a). So when Maruti was decided, amalgamation definition came. Their logic is that Saraswati was decided when there was no definition of amalgamation. Now they have to distinguish Maruti also. So Maruti, they are saying, Maruti followed Saraswati. Maruti did not notice the change in the Act by definition. Yet the legislative change by way of introduction of Section 2(1)(a) defining amalgamation was not taken into account. Further, the tax treatment in various provisions of the Act, the 100 sections which they are discussing, were not noticed and were not brought to the notice of this court in the previous decisions. They are laying a ground. There is no doubt that MRPL, amalgamated MIPL, they cease to exist, etc., etc. And then they go on to distinguish and they bring out the facts that look here, these are typical facts on the basis of which we are deciding that the notice is not bad. The order is not bad. Then they say, before concluding, this court notes and holds that whether corporate death of an entity upon amalgamation per se invalidates an assessment ordinarily cannot be determined on their application of 481 of the Companies Act. So they are now saying, I'm not going to look at this. Now this could be dangerous. Recording, right? Okay. But would depend on the terms of amalgamation and the facts of each case. So therefore, he has left a way out that it depends on terms of amalgamation and facts of each case. But by and large, quite risky. वही रहने वाला है, I mean. Anyway, yes. He has quoted terms of amalgamation, he has quoted assessment order 4 or 5 pages, etc. So this is Now we come to High Court decisions.
So just in this case, now if this court is distinguishing Maruti, then even in good facts where say SSC has implemented you, still department will use this.
Of course,
decision.
of course.
And this decision is on law point overriding Maruti, we can say. Then as such the law has changed, right?
Yeah.
So
It's
even
a
in good
question
facts-
mark that is why they have tried to distinguish that. Otherwise, one would have said you should have referred to a larger bench, etc. if you're taking a different view. But here they are saying Maruti did not consider 2(1)(a). Maruti did not consider this was not brought to the notice of Maruti, etc.
This judgment as a supersedes.
It's bad. It's bad. But I mean, I would feel that there is no practical importance to this from as on date. Because to the extent I understand, because of the electronic era, because I'll check up, I have received orders and even appeals where the name of the dead and the legal heir both are mentioned.
Corporate.
So corporate also it will come कि उजना PAN आएगा through so and so. And here somewhere they are quoting Marshall and Sons and they are saying, look here, what was the option with the AO? The option with the AO was he passes one assessment order with income of each of the amalgamating entities and done the total. If instead of doing it in one document, he has done it in 3 documents, then what is your problem? Supreme Court is asking that, what do you want? You want him to compute income in the hands of the transferee entity. But when he is computing income in the hands of the transferee entity in one order, he is going to compute income of transfer number 1, transfer number 2, 3, and then transferee independent. So here, instead of that, he has used a separate order. So how does it make a difference? This is actually there. I mean, this is not me saying. So, but I would believe that practically you need to add as a legal representative.
No, I appreciate for succession part, yes, individual part, but
नहीं amalgamation में शायद है check कर दीजिएगा मैंने कभी किया नहीं है. And now with this updated return thing and all that, I mean, this special, the amendment which came in 2022, for amalgamation, you have an option to even revise your return and do that one. Special, some provision came in this. Yeah, there is a provision. Okay, now we come to ATIB 10, Bombay High Court. Now here, 1 or 2 points only. So what I will do is I'll pick up the relevant issues and concentrate. Now, this was AY 78, SSC claims ATIB 10, AO disallows ATIB 10 on the ground that you are not a developer, you are a facilitator. Okay. Now, what happened here? The facts were that there was some society which was owning land. This builder developer enters into a development agreement with that society. Then he enters into a development agreement with somebody else. So basically, he has that DA and he gives a DA down below. So when he gives a DA down below, his terms are that 50% of the revenue belongs to me. So qua this 50% of the revenue, he claims ATIB 10. Therefore, his gross realization is equal to ATIB 10 claim because there is no expenditure on the debit side. Where he is not to do any construction, etc. Everything the other man is doing, he is getting 50%. So the AO says that, look here, 2 or 3 reasons according to the AO. I'm not getting into, I'm coming to the issues proper so as to rush. Number 1, AO says you're not the owner of the land. Land is in the name of somebody else. Number 2, you are not a developer. You have not made any payment, right? You are not. Then number 3, when you enter into a subdevelopment agreement or a second development agreement, you become a facilitator. You are no more a developer. Then the AO also looks at the date of approval and says that the date of approval is 1996, which is before 98, and therefore also you are out. Right? The matter travels and SSC goes to the CIT appeal, CIT appeal allows the appeal. SSC goes to the tribunal, revenue goes to the tribunal dismisses the appeal of the revenue, and now you have the appeal to the by the revenue to the High Court. Now, High Court says three things we have to consider. Lack of ownership of land. Number two, assessee not having invested in construction activity because he is claiming the gross receipts as 80IB 10. And number three, project was commenced or approved before 1/10/98 being the stipulated date. On point number one, land not being in the name, High Court says we have been pointed out decision of Gujarat High Court in Rate Developers, so that matter stands closed. So that argument is out. Now come to the other argument that nothing, is he a developer or not? The High Court notices that tribunal has given a finding that one of the partners of the assessee firm has been involved in the project right from the beginning, right from the time of principal agreement, and IODCC has been issued by the municipality in the name of this assessee firm. Right? All property tax payments were made by the assessee firm. Assessee has made payment for development rights. Naturally, when the society gave, so something you would have paid then. Right? In our assessment here, there was no payment involved. There was no deduction because everything he would have claimed. Because some part of the project he has done in an earlier year. So as far as the approval before 1/10/98 is concerned, the tribunal notes an interesting point came. The court says that the AO has missed out that unless the assessee has some role to play, why will anybody pay 50%? And the court clearly says on this issue, we are in agreement with the tribunal. The tribunal notices, now if I have to answer that on behalf of the department, I will say that the person paid 50% towards land rights. Because once you have a development right in your favor, who are you? You are a landlord. You have this potential. Now I am transferring this development potential of the land, so to say, to you in consideration of 50%. That does not make me a developer. But nevertheless, I mean, the High Court, this argument appeals to the High Court. The High Court says, fine. Then therefore, last point remains, what happens to 1/10/98? They say that under MRTP Act, a life of IOD is only 4 years. Here, the assessee entered into a development agreement in 2001 and second development agreement supplementary later on, 2 years later. So they say at that stage, the plans were changed. The original IOD of 1996 expired and a fresh IOD was issued. So therefore, they say that project died a natural death. This is a new project, and the tribunal has noticed that earlier the plan was only for 3 buildings, whereas now it is 4 buildings or vice versa. So therefore, there is a change in the plans which is noticed by the tribunal. The technical argument taken is that the life of IOD is only 4 years. Therefore, in 2001, the life of that IOD expired. The fresh IOD issued in 2002 is the first commencement which is happening after 1998, and therefore the assessee qualifies for deduction. That's the ratio.
Your view on this second IOD?
And that's a legal position. That's a MRTP Act provision. Oh, actually,
It automatically-
उसका life ही.
So, but if there is any correction, or normally they have some correction or extension, like
Then it is the same. Then it's the original.
then it takes the original.
Then it's the original. So you are modifying or revising. It's like a rectification. Then if you rectify, rectification relates back to the original date. Apna 154 maybe. Okay. Right.
Name this decision because the online people
Yeah.
should know.
Acha, okay.
Yeah.
Okay. Fine.
Yeah.
The decision we discussed was the decision of the Bombay High Court in Abodh Builders, the citation Act Sutra 113 High Court 2022. All the decisions the list we can circulate. In fact, if you, if participants are interested, I can give even copies of all the 35 decisions in a PDF format. I have anyway done it.
Yes, it will be circulating it.
Right. Now we come to the Allahabad High Court decision, which practically should be important in today's area. Dauji Abhushan Bhandar versus Union of India. Now, the proposition here is that issuing a notice is different from digitally signing a notice. So if I have digitally signed the notice by a particular date, which is within a limitation period, but I have issued it after the limitation period, the question is validity of such a notice. Here was a case where a reassessment was getting time-barred on 31st of March 21. The notice was digitally signed on 31st March 21 for assessment year 13-14. This is because of TOLA, the life got extended to 31st March 21. So the notice was digitally signed by the AO on 31st March 21, but it was received by the assessee on his registered email ID on 6th of April. The assessee came up in petition saying that this is a notice issued beyond the limitation period and therefore it needs to be quashed. Obviously, the answer was that no, I have digitally signed it. Therefore, signing is same thing as issuing. So the court heard the writ petition and framed 4 or 5 questions, out of which 5th was agreed between the counsels to be kept open. They said leave 5th aside, decide 4th. The 4 questions are wonderful. Number 1, whether digitally signing notice would automatically amount to issuance of notice. So whether signing and issuing is one and the same or they are 2 different. Whether next question, whether digitally signing a notice and issuing it are 2 different acts. Third, whether issuance of notice shall take place on the date and time when it is dispatched either electronically or through any other mode. And 4th, whether merely generating notice from the departmental portal. I have generated a notice on 31st March, digitally signed it, amounts to issuance of a notice. So here, the petitioner said, no, signing is different from issuing. You can't say signing is same thing as issuing. See, if I have to compare it with the physical era, when notice sign करके drawer में रख दिया, so will you say you have issued a notice? When would you say you have issued a notice in a physical area? Sorry? When you dispatch. Therefore, when you lose control over it, when the person signing it loses control over it, you say that you have issued it. I think the same proposition we used to take it for interim dividend. Unconditionally set apart for distribution by way of dividend. So income of which year? In the year in which the dividend warrant is posted, not necessarily in the year in which dividend warrant is received. Declaration has got no meaning. The board may declare interim dividend, that has got no meaning. The actual check has to be out of the control of the company so that it cannot be retrieved back. Because resolution passed can always be cancelled. Okay, then the assessee argued, or the petitioner argued, 149 provides for limitation on issuing a notice, not on signing. When the notice has been issued beyond the period, out. Right? Then they relied on provisions of 148, 149, 282, and 282 capital A, read with rule 127 capital A. Also relevant is the definition contained in sections 3 and 13 of the Information Technology Act. Okay. Then there are 2 Gujarat decisions, one of Gujarat High Court and second of Allahabad High Court on the same proposition. So it would help, like, it is not one court saying, it's multiple. The Gujarat High Court is Tanubai Patel, HUF, in 12 taxman 2011, 12 taxman.com 198. And the Allahabad High Court decision is in writ petition being number 822 of 2016. Srimati Kusum Agarwal versus ACIT, order dated 28th August 2017. The revenue said that, look here, signing and issuing is one and the same. If I have signed it on 31st March, it is supposed to have been issued on 31st of March. The court read section 282A and noticed that it provides, 282 capital A provides for authentication of notices or other documents by signing it. There, 282A uses different words. It uses the word signed, it uses the phrase issued in paper form or communicated in electronic form by that authority. in accordance with the procedure as may be prescribed. The procedure is prescribed in Rule 127, capital A, that the email has to come out from the designated email address of the concerned authority. So if your officer sends you an email from somebody else's ID, that's not valid. It has to come from his own designated email account, right? Then 149 provisions were referred, etc. And the court comes to a conclusion that after digitally signing the notice, authority has to issue it to the assessee either in a paper form or through electronic mail. As per section 13(1) of the Information Technology Act, after a notice is digitally signed and when it is entered by the authority in a computer resource outside his control. Therefore, the same thing, it has to leave my system. That is control of the originator. Then at that point of time, it would be said that that is the time of issuance of notice, right? So, however, the term issuance of notice is not defined. So the court went through the dictionaries, and not one, but 3 or 4 dictionaries. They have taken the meaning of the word issue and then come to a conclusion after having referred to those dictionary meanings and the decisions to which I made a reference. Finally, the court held that merely digitally signing the notice is not issuance. The notice issued, the impugn notice in this case, was quashed. Right? Now, again, a Bombay High Court decision in Dinar Arka. Now, here also, here was a case where section 150 was sought to be invoked. A reassessment was sought to be made. When the reasons were asked for, the AO relied on the provisions of 150 and said that I am not bound by the limitation of 149 because I am doing a reassessment consequent to a finding or a direction given to me by the CIT appeal. Okay. Now, what are the facts? The facts were that there was a company of which 2 people were the shareholder and directors, one being the assessee, another. Now, this company of which these 2 people were shareholders, directors, gave a loan to another company in which these 2 shareholders were substantially interested. The addition was made in the hands of the that concern for deemed dividend. That concern came up in appeal to the CIT appeal. CIT appeal deleted the addition in the hands of the concern and gave a finding, made a mention there that the AO is free to do the addition in the hands of the shareholder. So now, based on this sentence in the appellate order of that concern, the AO wanted to reopen the assessment of the shareholders. Right? So the question was, does 150 apply? Because if 150 applies, then no time limit applies. It can be reopened anytime. But here, for 150 to apply, read with explanation 3 to 153, there has to be a finding, a direction, or a finding. If it is a direction find, if it is a finding, then that finding has to be after granting an opportunity of to the person who is going to be adversely affected by the finding. Okay. So here in this case, the question before the court was, is this sentence or is there a finding or a direction in the order of CIT appeal? Now, what is direction? Direction is a command. Direction is something which I say and you are bound to follow it. That is a direction. The court saw the order of CIT appeal and said, no way, this is certainly not a direction. Then the question came, is this a finding? Now, what is a finding? They said finding has to be a finding which is necessary for disposing of that appeal. It cannot be an incidental finding. The finding has to be directly on the issue being decided in the appeal. And for understanding the meaning of the phrase finding or direction, the High Court refers to 2 Supreme Court decisions, and then they explain that there could be an example that the CIT appeal may decide that this is not income of this year. That's a finding, but which is necessary for disposing of that. But he may, incidentally, having said that this is not income of this year, he may say this is income of so and so year. They say the second part is not relevant to decide your appeal. Therefore, the second part is not going to be the finding. The first part is the finding which you are giving, right? This is the example taken in the High Court decision, which High Court says it is picking up from a Supreme Court decision, right? So this is, then they say in either way, this finding has to be with, or rather after granting an opportunity of hearing to the person who is adversely affected by the finding. They say even if we assume, that firstly it's not a finding, but even if for argument's sake we assume that this is a finding, the point is this finding was not confronted to the petitioner over here who is adversely affected by this finding, and therefore the extended limitation does not. An argument was taken that look here, he is the only shareholder director. He represented the assessor. That concern also. So therefore, can I not say that he was aware of this? They said no. Some other Supreme Court decision is cited where a partner of a firm, which deals with a partner of a firm, and they say that if a partner was asked that explain the source of funds of the partnership firm, it is one thing to ask him that. He can say it was funds in the firm were introduced by the partners. But it is another thing to ask him that where did the partners, you the partner, get the money from? The two are different. Now the High Court says if Supreme Court said two are different in the context of a partnership firm, here that argument becomes much weaker. So net, the answer was that mere mention in the order of CIT appeal that this income may be taxed or can be considered for taxation in the hands of the substantial shareholder does not constitute a direction or a finding sufficient enough to reopen the assessment of the substantial shareholder beyond the limitation period mentioned in 149. Now we'll come to the last of the decision. Maybe I want to deal with this because it's important. This is again a Bombay High Court in Dinesh Wazirani's case. Now here is a case where the writ petitioner along with one other person were the promoters and the only shareholders holding 100% of the share capital of a company called WMI Cranes. They entered into a share purchase agreement with a purchaser for sale of some part of the shares belonging to the promoters. Then little later, they enter into another agreement with the same purchaser for selling the balance shares. Therefore, both the agreements combined, 100% of the share capital of the promoters would become the share capital of the purchaser. The consideration was 155 crores both together, 30 crores to be kept in an escrow account to be given to them after certain time period and if certain obligations did not arise. Now, the assessee filed a return computing capital gains proportionate to his shareholding with reference to consideration of 155 crores. Therefore, even 30 crores, which was in escrow, which was not received by the shareholders, capital gains thereon was also offered for tax. The assessment was done. Everything accepted. Subsequently, it so happens, much after the assessment, that out of the 30 crores, a liability of 9 crores arises. When a liability of 9 crores arises, this man feels that I'm getting only 21 back. So this 9 should have been given to me as a deduction. But by that time, assessment is over, 143 done. So he files a 264. And in 264, for the first time he says, naturally, that this 9 crore should have been reduced from the full value of consideration, and my capital gains accordingly should have gone down. Therefore, entertain my revision application under 264, reduce my capital gains, direct the AO to grant me a refund to the extent of taxes excess paid. The the principal commissioner assists an order, obviously rejecting. He says entitlement under the agreement is to receive 155 crores. Whether 30 went in escrow, 9 was not returned, I'm not concerned. As per, that is a contingent liability. No deduction can be granted for contingent liability. Under share purchase agreement, you were entitled to 155 crores. Therefore, I am going to, there's nothing wrong in paying. Then he says that in the absence of a specific provision by which assessee can reduce return income filed voluntarily, the same cannot be permitted indirectly. So the commissioner is saying you are indirectly reducing your returned income through this method. And what are you doing? The voluntarily offered return amount, you are now reducing it. Here, and for this proposition, the commissioner relies on proviso to section 240, which says that even if an assessment is annulled, the amount of tax paid by you on the returned income will not be refunded to you. So he says that return income is sacrosanct. You cannot go below return income, and certainly not by coming to me under 264. The contingent amount does not have effect on amount receivable, because amount receivable anyway is 155 crores. Go and read your agreement. Right? Now, agreed by this, naturally, the petition, assessee came, filed a writ petition. And what does the court say? The court says the commissioner has failed to understand that the amount of 9 crore was neither received by the promoters nor accrued to the promoters. As the said amount was transferred directly to escrow account and was withdrawn from the escrow account. 30 went to escrow account. From that 30, 9 was withdrawn. So it never accrued, according to the court, to the petitioner. I would agree. So when the amount has not been received or accrued, the same cannot be taken as full value of consideration in computing the capital gains from transfer of shares of the company. PCIT has not understood the true intent of the share purchase agreement. He has not appreciated that the purchase price as defined in the agreement was not an absolute amount, as the same was subject to certain liabilities which might arise to the promoters on account of certain subsequent events. The full value of consideration in our view, in the court's view, will be amount which was ultimately received by the promoters after adjustment on account of liabilities from escrow account as mentioned in the agreement. PCIT has gone wrong in not appreciating that income or gain is chargeable to tax on the basis of real income here. Now you have one more decision to say capital gains also need to be computed on the basis of real income. It's debatable, but in a very old decision, dealing with some shares, getting the name, I give you, for the first time it was said that even qua capital gains, the real income theory applies. Supreme Court has Juna.
Balbir Singh Maini also said.
Balbir Singh Maini.
Yeah. They have said that.
Yeah, the transaction got cancelled. Yeah, correct. So basically now we are getting multiple decisions. Balbir Singh Maini also is right. There was an old decision, I don't know, Dalbai ke time ka, where also there is a reference of real income theory. So why this doubt arises is because capital gains charge under 45 is taxed in the year of transfer. So therefore the question is, if there is a transfer, income.
In this example, this very example, 30 crores, 30 CR was transferred to escrow account. So when will, and 9 crore was not received.
9 crore was not received.
Was not received. So 21 crore was received. Now when will this 20 crore?
In this case, assessee had offered.
No, he is offered otherwise.
I would.
The High Court said that it is not accrued only. So this 21 crore will accrue when?
In the year in which you receive it.
No, the year of transfer.
No, no. In the year of transfer, you have already said it is not accruing. Now, all that you can tell me is that in the subsequent year, you are returning capital gain, but there is no transfer. Now, if you take that view, then no court is going to decide in your favor. Because then what are you telling me, Mahendra Bhai? Okay, this amount will escape taxation.
Exactly.
In that case, why should I not then tell you, okay, this is income, not getting into any other, now come and income from other sources.
No. Any receipt which does not form,
It is forming part. No, I agree. Is this amount correct? I agree. It is a capital receipt, but then one way is that I get into 154. There, the difficulty which I'm facing, the difficulty which I'm facing is 154 is based on which record?
Yeah, exactly. That's what that
record.
This is a mistake happened from the.
No, I'm saying it is a mistake apparent on record, but record on as on which date?
Yeah.
Record as on the date when assessment was done, or record as on today. If you look at record as on today, there is a mistake. But if you look at record as on that date, so this research I have not done, but this is there in my mind. Okay, this is a catch. If even subsequent record can be considered, then according to me, it is 154, go back there and tax it there. Earlier it used to happen. Compensation के rate पे करते थे. नहीं, एक मिनट. 88-89 के पहले 54-54F में करते थे. ये जो आपका कैपिटल गेन अकाउंट स्कीम आया, वो कैपिटल गेन अकाउंट स्कीम 88-89 में कहीं आया. और उसके पहले हमेशा आपको 2 बरस और 3 बरस का टाइम तो था ही. Now it is a different thing if you tell me कि तब 3 बरस में assessment ही नहीं होता था. I mean, if you tell me that, it's a different thing. But नहीं तो theoretically 3 बरस में अगर assessment होना नहीं होता था, I mean हो जाता था, तो 3 बरस का टाइम था मुझे construction करने के लिए. तब capital gain account scheme नहीं था. If you go to the purpose of capital gain account scheme, I think somewhere they have said to avoid all these rectifications here. Now I do not know whether 155 में specific था कि नहीं था. I have not examined that. Possible कि 155 में specific power था उसको कि जाके rectify करने का. So this either 155 must come in. I think somewhere in your representation you take this. So at least you will ensure you are not taxed in the year where you don't get the money. Number one, and number two, in the subsequent year there is no controversy. Where on the deduction part, there
additional compensation should be taxed like that.
हाँ pre-budget memorandum में कहीं दे देना चाहिए.
Right? Apply real income theory and.
No, not apply real. Wherever consideration is not received and is to be received in future, it should be taxed in future in the year of receipt. But the cost तो आगे मिल जाएगा. Cost be in this case also you have got the full cost. No? Okay, fine.
Sir, the other the fact pattern is like that for a property there are some disputes on some statutory dues, and that department is not giving the NOC for transfer, not tax department but some other levies, whatever. The seller is contesting right now. So what the buyer agrees is that I will pay you whatever XYZ crores to deposit. If you win it, it will be refunded. If you lose it, then this is my cost.
Sorry, come again.
So it's a contingent consideration.
Correct.
Right?
According to me, there is no transfer only. Because if I cannot transfer without that NOC, there is no transfer at all.
No, but if I deposit, then the NOC will.
It is an agreement to transfer.
No, the deposit with the government department.
Correct.
So once I give the government department, the transfer
Correct.
will happen.
Okay, fine.
Right? So the seller says, okay, if you are going to bear it at 2 crores, fine, we will do the transaction.
Okay.
So that is done. In future, but if he wins the case, that is to be returned back.
To whom?
The buyer.
To the buyer, no?
Yeah.
So therefore, that is not consideration at all.
So whether seller should
Whether
seller should offer
compute,
it
no, seller should not offer it for tax, because even if he, in a worst case scenario also, this money has to go back. But there is no situation in which this money becomes seller's money. See, in your example, where is it possible that this becomes my money? It's never possible in your example. So there's no case at all.
Okay, but the liability which I have paid was
Fine. So if that liability is mine, then this income and that liability set off each other.
We had a case that 1% TDS on which amount to deduct.
That could be a different
Because we
issue.
were from the buyer side.
If you are, if I am from the buyer side, also on the full amount.
That's what we are. That's what we advise. But then there is a deadlock on that. So what is the legal?
You can take an indemnity and sort the issue. You can take an indemnity from an ultimately, even otherwise, I think you would not be totally wrong if you say don't deduct TDS on that part, because that part is going to come back to you anyway. Okay, so coming back to this, Bombay High Court reproduces the observations on real income theory from Shurji Vallabhdas, and they said real income can be computed only after you subtract the amount which is in escrow and ultimately gone out, right? They say PCIT has proceeded on an erroneous understanding that arrangement between seller and buyer, which results in some contingent liability that arises subsequent to transfer, cannot be reduced from sale consideration. So that's an erroneous understanding. We say, the court says, we say that because the liability is contemplated in the share purchase agreement itself, and certainly the same should be taken into consideration to determine full value of consideration. This is an unreported judgment, so I'll share a copy. Right? Even if contingent liability is to be regarded as a subsequent event, then also the same ought to be taken into consideration in determining capital gain chargeable to tax. In absence, now the second condition of the PCIT was that in absence of a specific provision by which assessee can reduce the return income, it is not permissible to resort to it indirectly through this 264 rule. They say that contention is erroneous, completely erroneous. They say, in fact, the court goes to the extent of saying section 264 in our view has been introduced to factor in such a situation. Because if income does not result at all, there cannot be a tax. Even though in bookkeeping an entry is made about hypothetical income which does not materialize. 264 does not restrict the scope of power of respondent number 1 to restrict relief to an assessee only up to return income. It is obligation of the revenue to tax an assessee on income chargeable to tax under the Act. And if higher income is offered to tax, then it is the duty of the revenue to compute the correct income and grant refund of taxes erroneously paid. Reliance on 250 is not justified because those circumstances do not exist. Then coming to return income is sacrosanct. That was the language of the PCIT. The court says the only thing that is sacrosanct is that an assessee can be asked to pay only such amount of tax which is legally due under the Act and nothing more. If return income shows a higher tax liability than what is actually chargeable, then assessee is entitled to refund of taxes paid by it.